Schatz, president of Heritage Capital. Paul, it's great to have you back on the show. Before I get your earnings outlook, curious for your impressions of the president and his tax policy and its potential impact on the markets and investors.
I think it has absolutely no impact on investors. I think that he said nothing new. I mean, to me, similar to his speech in Ohio where it took him 11 minutes to mention the word jobs, today it was just another campaign speech. So I think the markets really discount any and all presidential speeches where it's nothing more than a veiled campaign tout for November. There's nothing new here.
Okay.
And I agree with what you said already. If we raise taxes, listen, the economy is growing under 2%. If you raise taxes in a teetering economy, you're going to fall back into recession. That's economics 101. This idea that to compare it to what happened during Bill Clinton's years is absurd. GDP was growing 4, 5, 6 to 7%. So to shave half or 1% off back then didn't even move the needle.
So why then are the markets selling off today? Is it because of the explanation you just gave? We're also on the heels of a new earnings season. We've got problems continuing out of Europe. How do you see it?
Yes, yes, and yes,
Yeah.
and I'll add on. And you've got you have a hangover from the jobs data Friday.
Yeah.
It wasn't awful data, but frankly, it was disappointing again. And we're stuck in there. We're slogging through this, what I think will be a plus 10,000 a month to a plus 175, 200,000 for the next 4 job reports leading into the election. It's not awful news, but frankly, we're not keeping up with the pace of the population growth.
Right.
Therefore, we're actually quietly sliding backwards. Something's got to change.
So somebody was quoted this morning, an analyst, saying that corporate earnings were the pillar of strength for the stock market, but now it's starting to crack. So does this change your S&P outlook for the duration of the year? What are you expecting? The Dow, of course, is up like 4.5% so far this year.
It doesn't change. Look, 1 quarter ago, we were on record earnings. So now we've got year-over-year earnings are going to fall. This is somewhat normal for a year, except for 2008. For what happens during an election year. We have an early first quarter rally, we have a springtime low, we saw that in June, we have some strength in the summer, and then we'll have a little more of a sell-off into September, October. I think this is all kind of very normal. Volatility is less than historical standards, and it's certainly quiet compared to the last 2 years. So no, I think the June lows and the early April highs are in. We're in a range-bound market. We should have some strength in the summer, but I think the real opportunity is coming in the fall. We're going to see a fall swoon, but probably below the June lows, and that's where I think you can really pick up some bargains. Right now, I think you got to be a little more nimble.
All right, so I'm taking the rest of the summer off. Paul, thanks. That's your advice.
You do
Paul
that.
Schatz. Okay.
Thank you.
Thank you, sir.
All right, let's get a quick check.